historically we'd have to have one analyst covering one name. We can actually use machines to cover those names just as well as the analyst can.
Good afternoon, everybody. Thanks for joining us. This is the final panel this afternoon. I realize that we are in the unenviable position of being the only thing standing between you and the cocktail hour. We promise a lively discussion around AI and its applications across finance, defense, and security. My name is Ryan Flanagan. I'm with ICR. We're a strategic communications firm that encompasses both investor relations and public relations. Thrilled to have with me Kent Collier, who's the founder and CEO of Octus. Octus is a credit intelligence provider trusted by the world's leading buy-side firms, investment banks, law firms, and advisory firms. We also have Neil Keegan, the CEO and co-founder of Marlinspike, which invests in companies focused on national security and defense technology. Before we hop in, maybe just a quick introduction each, and then why don't you give maybe a quick soundbite on sort of your purview of your philosophy when it comes to AI.
Sure. My name is Kent Collier. I started Octus in 2013. We are the world's leading provider of intelligence and data around the global credit markets. You can think of us as a Bloomberg terminal for credit, private credit, distressed debt, high yield bonds. My view on AI is I am the most optimistic person in this room about AI. I think it's going to fundamentally change everything that we do. I don't think there is any job that is not at risk. My grandfather was a barber for 60 years. Maybe that will last for a while. But I think in the next 5 years, there's going to be a massive transformation how everyone does white collar work, whether that be engineering, financial analysis, lawyering. I think it is going to be a very bright future driven by technology.
Great. Couldn't agree more with the last point. I'm Neil Keegan, the co-founder of Marlinspike. Founded Marlinspike in 2020. I saw a huge opportunity and an urgency to do what we do. And our mission is simply, we believe in that we need to rearm and rebuild our country and our allies by investing in the most dynamic and disruptive high-tech growth companies that serve not only defense missions, but also can have massive commercial applications. So that's what we did, and AI plays a huge role in what we do. It's one of our core sectors. Couldn't agree more with Kent. That is, this is a foundational technology that I think we're really in the early innings. I feel like it's like the internet back in 1994. Not sure where it's going to go, but it's going to be big and it's going to have a massive impact. And as it relates to investment returns, I almost like the crypto conversation earlier. Hard to think about a portfolio that shouldn't have some type of exposure to AI.
Great. So maybe as a kicking off point, we will weave this conversation together around AI. But stepping back, you guys both operate in very distinct verticals between defense and the financial sector. Probably different, unique challenges within each. Maybe Kent, starting with you, what are some of the AI challenges that you see in financial credit intelligence, and maybe how do those differ from just general business applications?
Yeah. So the construct of an LLM on public data is going to be commoditized very, very quickly. It already is commoditized very, very quickly. And so sort of the last mile in terms of information around private information is where we see a lot of the challenges. For example, if you are Ares Capital or you are HPS Capital, the way that you view the world, the documents that you have, they're all very, very different. And so every customer has a different library of data that no LLM has been trained on. So the question is how do you empower these institutions with their own proprietary data? That is one of the, I would say, the biggest challenges in terms of financial data right now, because again, everyone has access to the SEC filing. Those haven't really changed for the last 12 or 13 years, but a private credit document is a document that really didn't exist 10 years ago. So I would say that's one of the biggest ones. I also think how people intersperse the financial analyst and the pattern recognition, that is probably not going to be done exclusively by a machine with getting as much utility out of that machine as possible. So I think there is this weird balance right now in the financial markets where people, analysts, and portfolio managers especially don't really know how to utilize the technology. And I think that's going to be really interesting because whoever utilizes the best over the next 2 to 3 years is probably going to have the best returns.
So, we obviously focus on the defense sector. For those of you that watch 60 Minutes, one of our companies was on over the weekend. Palmer Luckey, CEO of Anduril Industries. Look, this is the company that we think is going to be one of the most iconic companies, not only for defense but for our country and our allies. So it brings up these topics of ethical AI. So the challenge of, I'm sure people are concerned about AI going rogue, like in the Terminator or killer robots. But it really comes down to where we are with our military and our adversaries. Our adversaries have been studying us for the last 25 years. They know what we have, they know what we operate, and they've been making massive gains in technology, a lot of it driven by AI. And a lot of this, at least as it relates to the military and national security, is about closing the kill chain. And if that's not a term that effectively what it means is speed for decision making. So you can envision a world where if there's a potential conflict in the Taiwan Strait versus China, this is going to be what's called a hellscape. Admiral Paparo talked about of missiles and drones and autonomous systems. It's too much for the human brain to comprehend and then act on. So the only way we win is with the combination of AI and then reigniting our industrial capacity like we did at the dawn of World War II, so we can be ready with the industrial capacity coupled with the use of AI for speed of decision making.
Got it. When I think of complex market segments, obviously defense and financial services are probably two that come kind of to the top of the heap. Maybe starting with you, Neil, how are defense contractors using AI to respond to some of these evolving geopolitical challenges?
Sure. So another one of our companies, they were one of the first to work on distributed edge compute capabilities. So if you think about the boom in cloud computing, where we're going next is out at the edge. So you think of a world where the world is becoming smaller and smaller, but we need these edge compute capabilities out at the edge. So on the commercial side, think about mining and offshore oil rigs and the ability to take in all that data at the edge, process it, and do something useful with it. And then in the military, it's the same thing. So the example I used earlier about a potential conflict in the Pacific, we're going to need to manage all these assets and have that capability to crunch data and use AI to manage all these assets. So I think those are areas where there's a lot of opportunity for not only government contracts, but branching into the commercial market, which is in many cases 10, 20, 30 times larger than just the defense community.
Got it. Kent, maybe how's Octus adapted your AI approach for what is maybe the most volatile markets we've seen in a decade?
Yeah, I mean, one of the things that we try to do is make our clients the smartest people in the room in credit. And because the markets are so volatile, there is many, many more securities that are moving 10, 15, 20% in a trailing, 1 month period than before. So an analyst or a research team or a portfolio management team has a fixed number of resources, basically hours in a day to analyze securities, credits, et cetera, et cetera. What we've done is try to provide a summarization engine, trying to give them a bird's eye view. Your perspective on defense is, hey, there's not enough mental capacity for humans to really analyze this. It's the same sort of thing in financial markets. Obviously, a bit of a different hell. I don't think the financial markets are a hellscape right now.
That was 08.
Yeah, we're not in 08 yet.
Maybe after Liberation Day for a couple of days.
And so, more. And I also think there's a trend in asset management, and this is probably going to be reviled in this room. I do think there is going to be fee compression inside the asset management space. Code 2 coming out last month saying, hey, we're going to launch this fund with extremely low fees. They still have to analyze the same number of securities. So how do they do that? They need to scale themselves with machines. And that's kind of what we're doing. So instead of one analyst looking at 20 names, we have one analyst looking at 50 names right now. That's all allowed us to kind of scale our coverage. So now we cover the entire market. Historically, we'd have to have one analyst covering one name. We can actually use machines to cover those names just as well as the analyst can.
Got it. So complexity is one core consideration. You guys are both working in industries that are also very, very highly regulated. Neil, how do defense and security companies balance innovation with staying in those regulatory requirements, within their industries?
So that's a good question. And for our mandate, we're focused on companies that are going to be disruptive. They want to upset the apple cart, and defense is prime for that. So we're backing, again, companies like Anduril or a Palantir, or earlier in my career managing a family office invested in SpaceX. They're literally going after these highly regulated businesses, and they see a lot of opportunity to gain market share. So they're going at it in very non-traditional ways. So in the defense world, there's fixed price and cost plus types of contracts. What a lot of our companies are doing is they're taking their own risk capital, they're taking capital from venture capitalists and private investors, and they're saying, you know what, we know what you need, we're going to build it and we're going to deliver it, and it costs this. And you know what, the margins might be 35-40% versus your typical big prime, a Northrop Grumman, a Lockheed at maybe an 8% margin, but they're going to deliver it faster, and they're going to iterate, and they're going to take market share by taking that approach, a non-traditional approach.
Got it. All right. And Kent, obviously the financial sector is highly regulated, changing at breakneck speed. We've talked a little bit about that this afternoon. What sort of frameworks have you guys put in place to navigate that?
I would say the regulatory regime and obviously the financial service market is almost collapsing, to be very candid. I do think, though, that at the state level, you're seeing some actions to try to protect financial information of various entities. My sort of thesis on the future is that if you are operating in this if you are a buy-side institution, if you're a bank, if you're a law firm, you are going to be operating all of your applications in one box on-prem. That is going to have all your client data, is going to have everything that you've ever done, and then that machine is going to only sit on-prem, and it's never going to go out to the open web. Because I do think at the end of the day, clients are getting very, very concerned that their information is going into the web, into training an LLM, whatever that might be, and that's getting very, very scary for clients that are dealing with big financial transactions. And so I think what we tried to do on the compliance side is really work with our third-party clients and saying, hey, if you have access to this document, we're going to verify that 3 different ways before we're allowed you to even see it. And so, I think maybe slightly different than the defense side, the MMPI thing is a very, very important aspect that is not really talked about a lot inside of sort of LLMs. We want to make sure that we're not restricting our clients from trading on information that we're giving them. So there's lots of things that are, and as you kind of alluded to, I don't even think we're in the first inning of this. Mm-hmm. I mean, I think we're probably not even in the ball field at this point, right? We're so early in this journey, and I think the rules are going to change based on whoever is in power at the time. But I do think it is a bright future, but it's kind of difficult to navigate the world right now.
Sure. I do have a few more, but I wanted to maybe take a pause and see if there was any questions. Sure.
I had a question about the fee pressure. So, ETFs and just quantitative, the fee pressure has been on. It sounds like with AI, you're saying that it will be like one more step down. Like, would it be like slow or?
I think the fee pressure is coming from the fact that a lot of active management has lagged passive management for a long time. It's been obviously a very difficult time for private equity because DPI has been very, very low. And so if you are these funds that are trying to really gain capital, you're going to offer lower fees. So I don't think AI is driving the fee compression. I think it's really the buy side responding to the fee compression and saying, hey, I need to do more with less, right? Can I build Agianic analyst? Well, I truly think that you can, right? Maybe you have an Agianic analyst that is really, really good at this sector or really, really good at projecting sales. And you bring those together to come up with an analyst that is potentially better than a human analyst. That Agianic analyst doesn't ask for a 401k match, does not ask for more vacation days, can work 24 hours a day, 7 days a week. And that's going to allow the buy-side institution to do just as much or more work at a much, much lower operating cost. They're not just going to take that margin, right? So I think the fee compression is happening, and then the buy-side institutions are saying, what are we going to do to maintain margin? And I think they're going to use technology for that.
And I think to add on to that, I think what you'll see, at least in the alternative investment space, the really big scale players in private equity and credit and real estate, I think there is free compression there because they have the scale and they have the ability to do it. I think that's also coupled with going after a lot of the large wealth channels with these very, very large RIAs and multifamily offices. But I think what's also happening with the markets, a lot of those large players, while great firms, iconic firms, you're probably getting more beta in those types of firms on the alternative side, and the nichier, smaller managers that are going into different pockets. I think there's going to be a barrier to entry there, but I think there's also going to be most of those firms are going to hold firm at the classic 2 and 20 model, because that's where they're not only getting beta, but they're getting alpha with their specific expertise.
I also think really quickly that the public markets don't value carry. So if you look at any of the public companies, asset managers, they all trade at some multiple of fee return. Mm-hmm. So who cares if your carry goes from 20% to 10%? The market's not going to value that. And there is this interesting time period in big asset managers where there are a number of funds that there is no second in command. So how that asset manager is going to have to be sold to a BlackRock or whoever it might be. So they would rather just lower their carry fee and just keep that fee return going, because they're going to get a multiple on that for the public markets.
Anyone else? Sure.
Yeah, just listening to you talk about some of the sort of applications for AI, it reminds me of sort of the amount of power that this is going to take in electricity. And I might have the honor of being the first person to mention data centers today. So I'm just curious which your views are on sort of how we're going to scale up to kind of meet the amount of power that we're going to need to do this.
Well, I did mention the name. The company is called Armada, which is effectively these mobile data centers. So what they're doing is they're going after this huge growth of data that's going to be proliferated even out at the edge. And so what they've created is effectively a 40-foot Connex box. It looks like something you'd see on a super tanker, and they put in essentially a mobile data center that can handle all of the edge compute power out on site. So at a dam in Brazil, at an offshore oil rig in the Gulf of America, or the Arabian Gulf. Just see if I get a little laugh there. But they're making them smaller and smaller so they can, for example, with the U.S. Navy, this was just announced recently. I'm a Navy guy originally, so it's near and dear to my heart. Again, Navy obviously distributed all over the world, building these mobile data centers and then deconstructing them, building them into the hulls of our 297, combatants. That's very, very important. And in many cases, these ships are nuclear powered, so you've got all the power that you need.
And I think there is, what is sort of happening is you've kind of got to this asymptote in terms of the number
Ooh, good word. Did you go to Princeton?
I didn't. There's sort of this asymptote, whereas if you add more power or more input into the large language model, you're actually not getting a material increase of the efficacy of that model. And that's why some of the smaller models are actually working better in very tight configurations or in tight applications. I also think 90% of the power usage is in the training part of the model, right? And that has been coming down. If you look like DeepSeek, right, that was trained at substantially less power because it was using, I think it was H20s versus A100s. So I think the market will kind of figure that out. But I also think there's, obviously there's been a huge push from a number of lobbyists to push nuclear power in this country, for the better, for the worse. So I think it's going to...
For the better, my view.
I agree. And so I think it's going to work out. But again, power consumption of a model that was deployed a year ago is 99% less today than it was a year ago. It's just the way it works, right? And I think, again, it's all going to work out. It's going to be a bright, bright future. It's really exciting.
Great. Wanted to close with a couple questions. One just around guidance for executives and investors. What should institutional investors understand about AI implementation when they're evaluating a financial services company?
In terms of like a private equity owner, or how do you think about that? Can you re-ask the question?
Sure. What should institutional investors understand about AI when they're evaluating a financial services company to work with?
Got it. That's a great question. You know, all of us are coming up with our different mousetraps. And I very much believe that domain-specific models are going to outperform generalized models. And so I think niche players are just going to be better. There is going to be, just like what has happened in private equity or in hedge funds, you know, there is long, short, retail, Latin America hedge funds. There is Indonesia private equity fund. That is going to happen in terms of AI and large language models, and they're going to be very, very specific models. And so if you are working with someone like Octus that just lives and dies by credit, like, we're going to be the best at applying that model on credit. We're not going to be great at an equity model. That's just not what we do. So I think it's just hyper specialization is how these people are going to choose winners from losers.
Got it. Turn into defense, maybe specific AI capabilities that companies executives should think about when they're, you know, deploying their security and defense strategies.
So I think you've got to have at least, you start with this revolutionary mindset. So I think we all agree, like, we're at the opening innings, or maybe we're at the corner bar before you go into the stadium with AI. Speaking of bar, we'll be there in a minute. But then it's really evolutionary. So I think you need to go in knowing that it's going to change. So you could spend a lot of time and a lot of effort and a lot of money trying to figure out the implication for your particular company. But I think you need to pick the best team with the best tech. And I also agree with Ken that I think for a lot of the LLMs and AI, you got to focus really on the specialization of what that tool is going to do. And I think you just need to have this evolutionary mindset where you need to be ready and adapt to change, adapt, improvise, overcome.
Got it. And one final one, because I see the Pavlovian response out there. You know, we talked about, you know, misconceptions and killer robots, those types of things, a little tongue in cheek. But what's one misconception about AI in your respective industry that needs correction? Maybe we'll start with you, Ken.
You know, it's interesting. This is probably more of a generalized answer to your question. And one of the things that I've been quoted saying is that I think every CEO should be the company's chief AI officer. I think an executive or a leader, even if you're a private equity, if you're a managing partner, whatever it is, that is delegating the strategy around AI to an AI engineering team is just going to be wrong. There's just not going to be buy-in. This thing is, we're not putting the genie back in the bottle. It's not going back in the bottle. It's only going to get better. And it's going to get exponentially better. I think it's hard for us. We, as humans, do not think exponentially. And this is very much an exponential technology. And I think it's got to come from the top.
Yeah, I would say you just need to be ready to embrace it and engage, because it's not going away. And our adversaries are using it and being very adept at applying it to their weapon systems. And if we don't, we're not going to be sitting here in this beautiful room and about to enjoy a cocktail with some great people. So it's absolutely vital for our national security, for the country and our allies, to embrace it and adapt and use it to our maximum benefit and maximum pain for the enemy.
Got it. Well, on the note of maximum pain, I think
For them, not us.
Unless there's anything else, I think it's a great place to stop. Great. Okay.
Thank
Thank you both.